Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. Today I want to talk about some proposed changes that are coming to the Roth, and specifically the backdoor Roth. Okay, first of all, let me start by saying this is a proposal at this point. It's not law. And I don't like to get political on this channel at all, but House Democrats have decided that they want to make some changes to help fund the $3.5 trillion deficit that we have due to the illness. And a few of the changes are going to affect a lot of us. So, is this the end of the backdoor Roth? So let's talk about three proposed changes to retirement plans. Now you guys, the first two really only affect the ultra wealthy, and you'll understand that when I get into it. First one is a new contribution limit, and basically what it says is if you are a owner of a retirement nest egg and it is $10 million or more, you are not allowed to make contributions to your IRA, either Roth or traditional, if it's over $10 million. Now, this also goes on to say it applies to taxpayers, single taxpayers with a annual income of $400,000 or more. If you are a head of household, it would be $425,000 of income annually or more. And if you're married filing jointly, it's $450,000 annually. So it actually, this is the one time where being married in the tax code actually doesn't help you, because otherwise you could have $400,000 and $400,000 and still be in there. But it basically says if your balance, and that includes your IRA, so Roth IRAs, rollovers, whatever, and your 401k balance, if those assets together are over $10 million, you can't make a contribution any longer. All right, the second one is, again, for really on balances over 10 million, and it's required minimum distributions. And the way this is written, you guys, and again, this is for the exact same people. Single, 400,000 of taxable income, head of household, 425, or married filing joint with $450,000 of income, taxable income a year or more, and a retirement balance over 10 million. So what this basically says is if you have a balance of 10 million or more, any excess over that 10 million, you would have to withdraw 50% annually of that amount. So let's say that on December 31st, my account balance was $10,100,000. Because I'm $100,000 over that $10 million cap, I would have to withdraw 50% of those assets that year. And of course, pay the taxes on it. Now, it goes on to say if you have account balances over 20 million, you have to withdraw that from the Roth IRAs and the 401ks first. So it's actually a double hit. Again, these are a couple of changes that are only going to affect a very small, select few out there in the world. But they tell us to save for our retirement assets, you know, and for 10 million, it's a big number, yes, but it's not huge. I mean, if you listen to Susie Orman, she tells you you need $7 to $8 million to retire. I don't personally think that's truth, but bear with me. All right, so now let's get into a couple of the rules that actually make a big difference for a lot of people. It eliminates the backdoor Roth IRA strategy. The new retirement plan proposal would affect the two types of backdoor Roths, the basic backdoor and the mega backdoor. So let's talk about how this works. So you guys, currently, if we look at the income limits, you see that for 2021, if you're a single person, the phase out starts at $125,000 and $140,000, you can't make a direct Roth IRA contribution. Same thing for married filing joint. It starts at $198,000, totally files out at $208,000 combined income. If you make over that, you can't make a direct contribution to a Roth IRA. Now, we've been able to get around that rule because anyone can make an after-tax traditional IRA contribution. It's not deductible, of course, but you pay the taxes, you put the money in the traditional IRA. Now, this is provided you don't have any other traditional assets. If you do, that gets messy. Check out this video right here if you want a little more in-depth on backdoor Roths. Okay, but essentially you make a traditional after-tax contribution and then you convert it to a Roth IRA. And this has been around since 2010. It's been completely legal and an easy way for people that were over that income limit to get at least their $6,000, and if they're over 50, of course, their $7,000 into a Roth IRA so that they could have some tax-free assets. This would close that door. This would take away the option for average Joes making, $140,000 if you're single. It would take away their option of doing a Roth IRA contribution. The second thing is the mega backdoor Roth. Now, this affects a little bit fewer number of people because to be able to do a mega backdoor Roth, you guys, you have to have a 401k plan at work that allows not only your contribution, your employer's contribution, but also has an option to do after-tax contributions. So basically you would max out your $19,500 for the year, your employer would put in his percentage, and then the limit actually for after tax goes up to $58,000. So depending on how much your employer match was, it could be up to $38,500 that you could put in after tax, right, into the thing, and then take an in-service withdrawal, roll it over to a Roth IRA, and essentially you could put $38,500 into a Roth IRA annually, aka the mega backdoor Roth. This proposed plan would essentially eliminate all employee after-tax contributions to 401ks. It would basically wipe that out. So basically you would have your $19,500, your employer match, and that's it. There would be no option for any of us to do it. Now, I don't know a lot of people that are able to put away $58,000. I'm sure there's some fire guys out there who are saving that much. And kudos to you guys. But again, this is a small portion of people that even have a 401k plan that allow this. But for the ones that did, the super savers out there, right? The guys who are really, really trying to save for retirement, they're losing this option. Now you guys, the really crappy thing about this whole situation is that if this gets approved into law, these are going to take effect January 1st of 2022. Now, again, I told you this is only a proposal. So I don't want you to go out and make brash decisions about what to do based on that. And I assure you that if they do make this law, I'll make another video and we'll go over all the changes so that you know for sure what you should and shouldn't be doing as far as Roths. But it's kind of a bummer that, in going after the ultra rich, they're doing a couple of things that are actually affecting a lot of people that are just normal Joes like you and I. Again, I don't get political on this channel, and I don't know that this will go through for sure. But from what it sounds like, there's not a lot of pressure on going against it. So it has a chance to go. Of course, it still has to clear the Senate and be approved, you guys, and I don't know that that will happen for sure. But if it does, as I said, I'll make another video. Okay. Anyway, I just wanted to keep you guys apprised of proposed changes out there that are going to affect a lot of people in their savings in a Roth IRA. I think the Roth IRA is the best savings vehicle there is, and I think everyone should be maxing it out every single year. Anyway, hope you guys got something out of it. If you did, do me a favor, drop me that like. It really helps the algorithm, gets the video out to more people, lets me know this is a video that you guys like, and it's content that I'll continue making.